Goldfinger. He's back. It is the Fat Tail Investment Podcast again, and it's about 6-8 weeks ago now. We had our resident goldhound Brian Chu on the podcast, and he is back today. Now I like to call him Goldfinger after the famous James Bond villain because he just loves gold and invests in gold. His family money. He does the gold service, Gold Stock Pro, for us here at Fat Tail Media. And he rattled the cage this week to say he wanted to come on to the podcast to tell you all about what's going on in the gold sector right now. Now, from my perspective, we saw gold rally a little bit. It was starting to suck in traders. I was starting to get interested myself because you could start to see the usual signs of a bounce of that type of thing. Then we've come back down again. So it's a really interesting time. I'm interested to hear because, again, the gold stocks, they look cheap. They look cheap. They're making money here in Australia, but they just can't get that momentum. So, Brian, thanks for coming on again.
Thanks, Cal, and I'm glad to be here this time round. I think there's a really strong case, and I hope that we get lucky this time.
Well, let's talk about what's going on in the wider context. So we've got inflation, which is, we tend to think as gold doing well in that scenario, but we also have the rate hikes coming out of the US, which is also perceived as a negative for gold because of the holding cost for gold. So can you tell us, from your view, is the case for gold stronger or weaker with what's going on?
Yeah, it's interesting that in the past, people would actually argue that a rate hike cycle, not just one rate hike, would be bad for gold because there is a greater incentive to hold fiat currency. So the whole idea is central banks, they've come up with fiat currencies, which is a competitor to gold as money. And when the interest rates are low, then you would actually be able to, there's better value in holding real assets because the price of assets are going to go up when the interest rates are down. And there's like the only reason why you hold cash is because you want the opportunity to go and buy other assets. But if and you're only rewarded holding cash by interest rates, like you receive interest on holding cash. Now the interest rates have been close to zero since 2009. When the central banks have actually reduced interest rates to virtually zero. And that's why we saw massive rallies across the board on literally everything. There were warning signs from the central banks that they wanted to bring the economy back to normal since 2013 or so. But they only started raising interest rates in late 2015. And that lasted till 2018 when we saw two market corrections in February and also December. And
I remember it. Yes.
Yeah, that was actually quite a difficult time. The first crash in February, I think, caused people to stir, but it was really not until the December 2018 crash, that one that happened just before Christmas, that I think people were realizing maybe the central banks have gotten it wrong with raising interest rates, but it was only about 2.2%, 2.25% that they raised it to before they went back and reduced it in mid-2019. Now, what happened with gold was gold did really well in mid-2019 onwards and started to break records, at least for all other currencies except for the US dollar. Australian dollar gold saw it go above 2,000. Now, it never went back below $2,000 in Australian dollar terms. And that's because clearly we saw that in 2020, the market started crashing because of the virus outbreak globally. And we had massive stimulus. Now, governments say they want to reduce, governments want to actually reel back on stimulus. Central banks want to reel back on easy money. And that's why gold had been stagnating for the last 18 months. They talked about inflation being transitory last year. Then it's going to be around for a longer time. Then they're saying, okay, we got to catch up and and crush inflation. And that's what we saw with the March rate hike, which was a really, really pathetic rate hike of 25 basis points. And earlier this month, the Federal Reserve initially scared the market into believing that the rate hike is going to be bigger than half a percentage point. And they turned out to not do it, but they added, we're going to take some of the easy money off the table. And that sparked the broader markets to crash. Gold and gold stocks went a bit earlier than that because of the whole talk. But I think the bite is actually not as bad as the bark. Where in the midst of the market digesting that the bite is hurting, but I think the bark is going to be that, oh, we're going to raise interest rates further. We're going to take easy cash off the table further. Everyone should start holding cash because cash is king. Whereas people like myself, I like my gold, thank you very much. I believe that they can try to control the gold price and push it further. And mining companies, I have, like the companies that I recommended, I've kept a close eye on their performance for the March quarter. They're looking pretty solid, even though we know that the Western Australian border restrictions have kept costs up, and so has the crude oil prices going up. So the case for gold producers and gold mining companies, I think they're very solid simply because business is as usual. They've gone through hard times because gold didn't rally as much as everything else, and oil has been going up. So these companies are working on becoming just more efficient in doing their business. But there's developments along the way, and I think it's a good bet. It's a good safe haven. Gold has proven itself to a safe haven in the last 2 months. We can talk a bit more about that afterwards. But
well, just in the spirit of our compliance officer, we have to say that there's no safe havens in financial markets. Yeah. Leaving that aside, gold is often not always, but can be described as a chaos hedge. That it's, when the world becomes very uncertain, the markets become very unstable, it can give you that a refuge, if you like, kind of things like that. Now, of course, with the Ukraine situation going on, we have a very volatile and unpredictable war going on. But we also have Russia bringing gold to the table, trying to reintroduce it to their system, right?
Yeah. Now,
have you been following that? Their attempt to, what I perceive it to be, is to back the ruble with gold. Is that right?
Yeah, that's right. I wrote about it a couple of times in the last 2 months or so, and it's been an interesting. It's been interesting watching it unfold. So, what happened was that the Russian ruble was generally trading at around 70 to 75 rubles per US dollar for much of last year, and when Russia announced that it would launch a special military operation against Ukraine in late February, the market started to sell rubles because they expected that that Russia would kick off the SWIFT system, and the G20 nations, many of them will impose sanctions on Russian commodities and exports that will hopefully squeeze its economy so that it will put pressure on the Russian government to pull troops away from Ukraine. That used to be the type of way that the current system deals with countries that fall out of that get out of line. You shouldn't be invading countries that you ought not to. You shouldn't be selling your commodities using other currencies or whatever else, because you're not playing by our rules. And if you break the rules, we're going to kick you out. That looked like it worked for about 2 weeks, 3 weeks, as the Russian ruble actually fell to about, I think, 120, 130 rubles per US dollar. But Russia actually had a secret weapon, and it was gold. It's not really that much of a secret, but the way they implemented this weapon was gutsy, but it looks like it's been pretty successful. So the Central Bank of Russia said to the local banks and Russian producers, we'll buy gold at a discount to the market price because we actually want to strengthen our ruble. And the Russian financial system, they can kind of do that because it's not as much of a free market as the rest of the world, even though it's not really a free market system as we see. But they were buying gold for 5,000 rubles per gram of gold. And that was actually at a significant discount. I think the implied price of gold that Russia was offering, the Russian central bank was offering, was about $1,350 to $1,400 an ounce, when the market was selling gold at about $1,900 to $2,000 an ounce. So what that actually did was it was making rubles artificially more expensive than the market. And the way that it could work is because Russia actually, they've got significant reserves to be able, I believe significant gold reserves, and some of the foreign reserves were confiscated, but I think they had the strength to do it. And that was able to hold for a while. Then the Vladimir Putin, the Russian president, actually said to the world, if you want to buy oil and gas from us, then you're going to have to open an account with a local Russian bank and pay rubles for the purchases. Now, a lot of countries actually boycotted Russian oil and gas on the surface, but it was revealed that America and Germany and several European Union nations, until recently, were actually buying oil and gas. So at that time, there was a demand for Russian rubles that would hold up this peg. Now, Russia has actually basically lived up to that threat. And several countries, including Poland, Hungary, and I think Bulgaria, are actually saying, yep, Russia is not making an empty threat that you got to pay rubles in, in rubles to buy the oil and gas. So that is going to shore up the ruble demand. And also the Russian central bank, instead of holding that tight peg on against gold, they've loosened it, and they've not specified what price range they're going to buy gold from their local banks and producers. But basically what we have seen is the Russian ruble has demonstrated to the world there is an alternative way to this financial system. As a US dollar, as a reserve currency, you can actually sidestep it, but it's quite risky. You need to have a strong military. You need to be able to have trading partners that are willing to buy from you, because if they don't, they can actually see the currency collapse, either because there's a rate on gold or the currencies.
Let's bring in crypto here, because I remember last time we spoke, we talked a little bit about the pull between the Bitcoin guys and the gold guys. And at that stage, I think it was fair to say that Bitcoin had the momentum and that type of thing. But what, in 2 months, maybe, I think that situation's flipped around. What do you want to update us on your thoughts on the Bitcoin versus gold debate?
Yeah, so I want to make a quick disclaimer here, is that I may be a gold enthusiast, but I'm not anti-crypto. In fact, the only thing I'm really anti in the financial system is the centralized planning and fiat currencies. So with cryptos, I have seen that the market for cryptos have been falling since November, but it's really come down in a big way, especially since the beginning of May. And I think some of our viewers may be aware that there is an epic war going on right now in Terra Luna, and also USD Terra, which is the stable coin launched by Terra Luna as an alternative digital cryptocurrency for people to trade on. Now, what's happened with Bitcoin is that we saw Bitcoin peaking at about 68,000 last year, and it's now trading below 30,000 US dollars each as we speak. Now, how did that come about? Is that Terra Luna, the company that runs USD Terra, they wanted to back the USD Terra, the stable coin, using Bitcoin, except they kind of let their game plan, they leaked their game plan, and I believe Citadel and BlackRock have actually taken an advantage to seize upon this situation, this vulnerability, just like what George Soros did back in 1991 against the Bank of England with the sterling pound. So I believe Citadel bought 100,000 Bitcoins.
Yes.
And then baited Do Kwon, who is the founder of Terra Luna, and say, hey, I'll sell you these Bitcoin for a discount to the market price in return for your USD Terra. And I think either Do Kwon fell for the bait, or he had a better game plan in mind. He actually took it, took the discounted Bitcoins, and in return for USD Terra, and then Citadel just go, all right, great, we're going to dump both into the market, trying to in order to break the peg between USD Terra against the US dollar. Now, when you break a peg, that actually can be have a drastic effect on the confidence of those who hold this hold your token or your currency, because most like when you're pegging something to another asset, you're making a lot of you're placing a lot of weight and financial decisions and other decisions people make on that peg. And if that peg breaks, there's a lot in line. There's a lot that is being placed on the line. So people who had placed a lot of faith in USD Terra actually have decided to dump and seek refuge elsewhere. And Terra Luna, their market value is basically on the confidence of this stable coin. So Terra went on a terrible, you could say, pardon the pun, on a terrible drop from about $80 last week to something like about $1 as we speak. Now, what does this actually tell us about the financial system right now? Is if you look at the big picture, the central banks actually want to control inflation. They want to reassert their dominance in the financial system. Janet Yellen has come out along with other central banks having attacked cryptocurrencies for quite a while. Janet Yellen's coming out saying, well, it's time to actually regulate the crypto industry because we need to restore confidence. And what better way to restore confidence than to actually show that, hey, Terra is collapsing and the crypto market is down about 40% since their peak, I believe. And that would be a crisis of confidence for crypto holders. Now, how does that link back to gold is, I mean, instead of saying it's a safe haven, it's a great refuge. And since the Russian-Ukraine conflict, we have actually seen that investors actually go to gold to park their savings or to park some of their speculative funds when things turn really sour. And in the past, the argument was gold has had its day. Move over gold, it's Bitcoin, which is coming. And the question now is, with what's happening with Terra Luna and also USD Terra, Bitcoin is going to be around. I don't believe there's a broken case like the case for cryptocurrencies being a place to invest has broken. It's just that it's been put to the test. And whereas gold, where we've been put to the test for the last 100 years since the Federal Reserve began, and it's holding up quite well. So
let's bring it back to the mining stock. So here in Australia, gold remains, obviously the Aussie dollar's been beaten up lately. So gold in Aussie dollars is still very strong. So there's really good cash flows going through the gold miners. How do you think it's the best way to play the opportunities in gold through mining stocks?
Okay, so with gold mining companies, it's important to understand the difference between producers, companies that are actually mining gold and actually selling it. Then you got developers, which are companies that have a deposit. They're in the process of building processing plants and infrastructure in order to start producing. Then you have the explorers, and there are several types of explorers. You've got the ones that are just going around digging holes in the ground looking for a deposit. Then there are some that have a deposit, and they're doing further exploration and talking with investors in order to hopefully get enough funding to bring it to production. So producers have done quite well since the beginning of the year, having made a strong recovery after having seen four false gold rallies, and many people had been basically chasing returns elsewhere. So gold producers are doing quite well. They have pulled back in the last month, but the results from the March quarter have shown that even though costs are up because of oil and labor shortages, many of these companies are still business as usual. Costs are a little bit up, but they're generating sufficient cash flows in order to keep them going. And as border restrictions lift in Western Australia and other states, you could expect that costs could come down, and it would also help with the rising price of gold because of future uncertainty with the markets. And I think crude oil, if it trades at the range that it is between $90 to $110 a barrel, producers should be able to manage that quite well with the rising gold price and also reducing labor shortages. Now with explorers, they have actually, quite a number of them have actually fallen to the 50-week lows and even lower than that.
So these are very highly speculative stocks, aren't they? So, but
Absolutely.
Again, they can become the those massive winners that we hear about every now and again in the mining business.
Yeah. So with explorers, there is actually a huge. They make a good gamble where they make a good punt, because you're punting on either the companies making a discovery, making their first discovery, or they announce that they've got the funding to build the processing plants. Now, the fact that it's gone to its 52-week lows or even lower than that, as you mentioned rightly, that actually just increases the potential for massive gains should everything work in favor of these companies. Now, on one hand, we say producers are a better way to play the gold rally, but they have infrastructure. They churn out profits, but they also consume a lot of capital because they need to keep the mines going. With explorers, they're much more flexible, and the companies that I have chosen in the portfolio that I recommend to my subscribers, we make sure that they have sufficient cash reserves to last at least two quarters, if not a year. So I mean, things can turn out bad for gold, and it has in the last 18 months, but most of them are standing strong. So we're closer to the end of the tunnel than the rest of the market. And if these explorers make any great announcements about they've discovered something, or there's good drill samples, or they're bringing their deposit forward, we've got some serious winnings that could come in handy, and I think right now it would be actually a great opportunity for people to capitalize on it, as long as they actually have they have nerves of steel, and they are willing to actually part with that cash, rather than just wanting a quick return, because nothing's guaranteed, especially with this end of the market.
Absolutely. I can certainly observe, for example, back in 2020, early 2020, the gold stocks were absolutely roaring, and any explorer that released good results or whatever would jump up on the day or whatever. But I think I told you last time, but at one point you're like, this is gone over the top now. Now it feels like it's gone too far the other way.
Yeah.
And if you've been around the resource industry and how it works, the time to get it's, as you say, it's not easy to do, but the time to be most interested is when the outlook is terrible and all the stocks have been dumped, because that's when you get the best prices and you get the best look at the opportunity. Doesn't mean it's going to work, but your buy-in is a lot less. And of course, gold since August 2020, at least here in Australia, the stocks have just been down and down and down. They've rallied and down and down, slowly crushing all the the people that buy in and try and chase the rallies and that type of thing. At some point, you're right, that is going to bottom out. And again, we still have those big cash flows going through the bigger stocks who can then go and buy up those junior ones that they like the look of if they want to.
Yeah, that's right.
So it's very interesting to me. And I can, just from a different industry, when iron ore collapsed last year, the same thing happened. All the little ones get dumped. I mean, the big ones get dumped as well, but it's always worse for the smaller ones. But then what happened? Well, iron ore rallied back up again, and you got to look at some really interesting stocks that have, some of which have since bounced back again. So it's definitely a very interesting dynamic.
In fact, if you look at what's been going on with a lot of these explorers, some of the producers and the larger explorers are actually snapping up the smaller ones and the ones with smaller deposit on the cheap, simply because they realize, hey, it's actually easier for us to buy up a company with a deposit than to actually go digging on our own. So we've seen a couple of consolidations, and that can also be a sign that the market may top or may hit the bottom when you see significant consolidations. And we're seeing quite a bit of that happen right now.
And we should also say, overlaying all this in the gold sector is the ASX itself, which is on the whole really flat across the board for all the small caps. The tech sector has been absolutely butchered. So again, it just puts more selling pressure on everything, just driving down those values. So it is super interesting, and I'm following the gold stuff really, really closely. What we do need, though, I think we need that catalyst to spark gold over 2,000 in the US to bring that momentum back to the sector. Are you sort of thinking along those lines about what's going to regenerate interest in this sector?
It's interesting you mentioned about how the catalyst for interest to return back to gold stocks is if the US dollar gold price goes up above 2,000, because I was listening to Mining Stock Education early this morning, and I was just going back and listening to David Earthley talk about this. He also mentions that basically you won't get a lot of interest in junior gold miners, as in the producer, as in the explorers and the mine builders, until gold hit that psychological level. And you also hear media talk about it, because a lot of investors, a lot of speculators, sadly read more of the mainstream media, and they trade according to the latest headlines. And gold's generally not really on the crosshairs at the moment. But being contrarian investors like myself, and also what I believe many of our subscribers to Gold Stock Pro are, we love to actually wait, even though it may hurt to wait until everyone comes around and join the party. And we've done it for the last 18 to 20 months. And I don't think it actually hurts to just wait a little bit more for that to happen. And it seems like it could very likely do so, as the central banks continue to raise interest rates. And even though they try to control the market by doing so, and the gold price is supposed to fall because of rate hikes, the instability of the market because of these rate hikes could lead to a flight to safety, which works in the favor for gold rather than against it. So rather than fearing these rate hikes, we should actually hope that the central banks botch these rate hikes by going too fast, and thereby causing a greater flight to safety. That's where gold is basically waiting in the wings for this to occur.
Oh, I think we've given a good overview. We'll put a link into your recent presentation that you've done. I presume when someone signs up, you've got your top, like some sort of some recommendations in each sort of component of the gold sector. So the explorer, your favorite explorer, favorite producer, that type of thing. Is that what they can expect? Yes,
that's right. So if you sign up to Gold Stock Pro, well, we have actually an event coming up, and I've got a free tip for you guys. If you if you watch that video, And if you join up, I do have 3 recommendations that I believe would be the top priority right now. And then you'll also be able to see my recommendation list, which contains about 20 companies, and I've classified them across the different stages of the mining life cycle.
Absolutely. And just as a second, I know that we, in my recent Small Cap Investigator issue, I had a gold company that you brought to my attention some time ago. And again, when the value gets that cheap, it's just the time to get interested. So absolutely encourage anyone listening to check out the presentation, and let's leave it here for today. But, we'll come back in a month or two and see how gold's looking then.
Thanks, Cal. And all the best with everyone. And I hope to see you all at my event.
Beauty. All right, mate. Ciao.